Motivated Mamas, I hope you are doing fantastic. I'm finally back from vacation. I missed all of you. I definitely got to recharge. I'm so excited for tonight's masterclass. We have Liz Faircloth here with us from the Real Estate InvestHer and also from the DeRosa Group, which is a real estate company that Liz started with her husband. They now control over 1,000 units of real estate and commercial assets throughout the East Coast. She's a true expert in real estate, and she works with Real Estate InvestHer to really empower women to be real estate investors and build their wealth in that way. And so she's here to explain the basics of buying our first real estate investment property. What does that look like? And how do we get started? And what are the things we have to think about? And so I'm super excited. We're going to bring Liz on to introduce herself. Then we'll pull up her slides and go through as always. And I'll be back at the end for Q&A. Love you all. Hey, Liz, welcome to the Motivated Mama Society.
So good to be here, Chelsea. So happy to be a resource here and join your tribe.
Thank you so much. All right. I know we have a lot we want to cover today. So mamas, introduce yourself in the comments so Liz can see. Ask any questions you have. We'll always have time for questions at the end. Let me bring Liz's slides up and we'll get started.
Awesome. Okie dokie. Well, I'm going to jump in because I have a lot in store for all of you. I'm so excited about being here. My name is Liz Faircloth. I am the co-founder of also a community called the Real Estate InvestHer community that we focus on empowering women to live a financially free and balanced life. So I got my start in real estate investing. I'm going to bring you back a little bit about my story and then really get into how to get started in investing. It can feel very overwhelming. Or for other people, it could feel very like they watch an HGTV show and in 30 minutes, people make like $1 million. You're like, I want to do that. So wherever you are on the spectrum of like really nervous or, wow, that looks really easy, I want to get in, I'm going to share some insight with you. And wherever you are on your path, my goal tonight is to give you some steps, 4 or 5 steps to really give you some good insight into what you can do today to move you along if real estate investing is of interest of yours. So excited about being here and excited to give you value. So I'm going to keep moving here. I got a quick story. So we learn through stories. I'm going to give a really, really quick story. So there's a young man and his parent and his father driving one day, and it was very dark, very bad roads, and they swerve off the road and they get into a car accident. And it's really bad. So the ambulance comes, bring him to the hospital. And, one doctor takes a look at the young man and says, I don't think I can help him. We have to send him to the surgeon. So they go into the operating room. Surgeon looks at this young man and says, I cannot operate on him. He's my son. So who is the surgeon? In the chat box, share with me who the surgeon is. It's a little riddle. If you were listening to me, who's the surgeon? Not by name, obviously, you don't know the person's name, but who might be the surgeon if you're listening to my story? I'm going to see if you see it in the chat. If not, I'll just tell you who the surgeon is. Might be delayed. You gotta love Facebook. Facebook's a little delayed sometimes. I think that's the mom. Yes, that was very quick. I've done this. I've said that riddle to many people. Like, what's going to the grandfather? And they often, and I love it because I'm in a mom's community. So of course you're like, of course the mom, the parent, that's obvious. It's not obvious to a lot of people. I've actually shared that story or that kind of like riddle, if you will. And people always think surgeon means man. So it's obviously not. It's the mom. The mom is the surgeon. But I literally have told that story a number of places, and people often don't always come up with the mom first. So my goal tonight, you're like, okay, what's the connection? My goal tonight is when you think of a real estate investor, somebody who's really financially savvy. I know all of you probably appreciate this because of how involved you are in this tribe and Chelsea's tribe, which is amazing. When you think of investor, we want to create a society that you think of a woman, not just a man, which it tends to be male dominated. So I'm going to go to the next slide here. I'm going to jump in here. Before I get into a few things, I want to share a little bit about my story. I started investing in 2004 with my husband. If you want to go to the next slide, that'd be awesome. It's a very old picture when I had highlights, many years ago, 17 years ago. My husband actually didn't have gray hair. My husband has a lot of gray hair now. But with no money. And I always like to say, no, if you don't mind going to the next slide, you can go through all there. No money, no experience, no connections equals no problem. I know you're probably laughing like, wow, that doesn't seem like a good recipe for success, but we didn't have any money. We were in our 20s. We didn't have any experience. We didn't have any family that actually bought real estate. We read Rich Dad, Poor Dad, like a lot of people. And you're like, I never heard of passive income. I've never heard of any of these concepts. And you get really moved by that. And my husband and I, when we were in our 20s, just wanted to contribute a lot to this world. And we said, wow, how great would it be to start our own business and start our own investments and, take a shot at this. So that was like literally 17 years ago. That was our first project. We bought a duplex in right outside of Philadelphia, a little town called Roxborough. Is a row home. And we learned a lot through that experience. My father lent us the money, $30,000 to buy the house. So we didn't have any of our own money. So we borrowed it and took a loan out and got a mortgage. And that kind of started our path. And then we've had a lot of twists and turns. I'm going to share some of that tonight. But it all kind of got started when I was a little younger and just a little more clueless. But you learn a lot and you grow a lot, and it's just about taking action. So hopefully tonight will give you some inspiration to take action. So you can go to the next slide. So why am I so passionate about this? So a few years ago, so as an investor, my good friend Andres and I would be getting together, and we'd be getting together over coffee and supporting each other. We were doing some flips, and we'd always be like, "Where are the other women in this business? Where are the other women in investing?" And we'd look for these groups. You go to meetups and you're always the only woman in the room. It's a book we published, but it's true. You feel that way. Like, I'm the only woman in the room. And we'd get together. And a few years ago, we said, we want to change this trajectory. We're really passionate about empowering women, empowering ourselves, and really creating a group of women to help them and what have you. And so as we launched this kind of women-focused group, and I'm sure Chelsea and her team could appreciate this, what's fascinating is that then you start to look at all the research, right? And women, I'm sure if in the chat, just share how many years do women outlive men? If you know that off the top of your head, how many years do you think? I'm kind of giving the answer of women outlive men or men outlive women, but by how many years do women outlive men? If you don't mind, I want to keep you engaged. I know it's 8:30 Eastern time, so I want to, and I'm sure many of you put kids to bed and had a full day, so I know we're a little tired. So I'm going to keep you engaged this whole time to kind of keep your energy up. But if you don't mind, share in the comments how many years, 10 years, close. So it's 6 to 7 years. Women will tend to outlive men, and some of your Facebook users. So if I see your name, thanks for participating. Hey, Wanda, Tiffany, thanks for being here. But yeah, 6 to 7 years. And so I'm going to give you 2 more statistics that are really powerful. On average, there's a ton of research that shows women consistently outperform men as investors by like 40%, like significantly outperform men. Yet that's the other percentage that women do not invest as much as men. So women are actually investing 40% less than men. So those are really statistics that we're really trying to shift in our community, and what we're up to with our membership and our podcast and all that fun stuff is just that women actually outperform men because they tend to be a little more conservative. They tend to do their due diligence. Women make amazing investors, yet they're just not doing it enough. They're not doing as much as men, yet we're going to outlive them. By statistically, we're going to outlive many, our counterparts. So that's really some of the things that kind of motivate us to kind of be doing this, and why I'm here with you all tonight. So if you don't mind going to the next slide. Okay, so I'm going to jump in and I'm going to go kind of deep into some case studies, but I want to give you some real good takeaways to actually do something with this information. I know we run masterclasses, and the last thing I want to do is just kind of bore you and just give you kind of fluff. I want to give you tangible actions that you can actually take as a result of being here tonight. That's my goal. So in a lot of ways, we know that real estate investing and real estate in general requires a lot of different things. I always like to say investing requires 2 things. And really, what's really helpful is to look in the mirror and say, what can I give? And where can I play into this whole arena? And that's what tonight is going to be about. So time is on the left and then money's on the right. And often those are 2 things that real estate investing require: someone's time and someone's money. Now, there's a lot of other things it requires: knowledge and experience, and in some ways, but really when it comes down to it, time and money are really key things. Not everyone has the same amount of time. Not everyone has the same amount of money. Yet you can bring something to the table, and you can also you can do partnerships. And there's a lot of creative ways to get in this business too, whether you have money or not, or whether you have time or not. When I started with my husband, we had a lot of time. We didn't have any money. But that didn't prevent us from getting involved. Okay. So I just want to give that as an example of wherever you are. Other people are like, I have the money. I have money in my 401k. I have money to invest. I don't have the time. But there's a lot of possibilities to that too, where how active or how passive you're going to be, which I'm going to totally get into this evening and hopefully give you some insight. So, all right, good stuff. So I'm going to give you 4 steps. I'm all about like bingo, 4 steps, takeaways. Step 1, clear goals, why statement, personal inventory. Okay, I'm going to go through each of those things and how important that is. Okay, so keep going there. Thank you so much, Chelsea. So if you don't mind, yeah, throw out. I want to have you throw those three pieces up, and then I'm going to go to and I'll go to the right in a second. So on the left-hand side here, you see your money goals and your why. Then you see your strengths, and then you see your interests. So let's start with your money goals and your why. So many people are like, should I flip right now? The market's really hot. Should I buy a rental property? Should I just wait? Because I don't know. Prices are getting, I don't know about you and your market, but prices are crazy right now, right? I think people are getting multiple offers on whether it's a single family. We're selling an apartment building. We've gotten 30 offers, right? So the market's nutty, regardless of what kind of niche you're in right now. But there are opportunities, okay? So keep that in mind. But knowing what your money goals are and your why, like why do you want to invest in real estate? It's really important. And I'm sure you dig a lot in this wonderful tribe that you're a part of. I want you to dig a little bit apart, like why real estate investing? There's a lot of different types of investments that you can get involved in. And knowing your why of why investing in real estate and also why invest is really important, right? It's not just to make money. That's a result, but you got to go deeper. You got to be like, why this vehicle and what about it is going to keep me motivated when the tenant may not pay on time, or all the things that can go wrong. And I could literally tell you a million things that can go wrong, but there's a million things that can go right. And really knowing your deep why and connecting with that to keep you motivated along the path is one of the most important things. The money goals is also important because some people need money now. Some people are just wealth building. Some people are actually just protecting their wealth. They've made their money, maybe a business venture as an entrepreneur, and now they're just looking to protect that money. So there's all different types of goals. There's all different types of paths. Knowing what your money goals are today and knowing what your money goals are maybe in 5 years are really helpful. So again, just food for thought as you kind of explore this, because that will be really important. Let me just go to if you don't mind, Chelsea, showing this other too. No, right there, perfect. That will be really helpful to say, okay, what type of asset, what type of investing will match my money goals? So if you said to me, Liz, I really want to replace my income. I don't like what I do. I don't like my job. I want to replace it with activity in the investing, real estate investing world. So then you say, okay, that's my goal. And then you say, okay, I'm going to buy a single family home. I'm going to rent it out. And that's going to replace my income. Obviously, that's not going to happen, right? I mean, I don't care how big the single family home is. You're not going to be able to replace your income with one rental, right? That's just not going to financially happen. But yet people do things like that. And they don't really think through, what are you trying to achieve? And is the asset that you're looking to invest in going to yield that money goal? So again, there's no right and wrong, good or bad, but you need to kind of think that through. I always like to say on the right-hand side, there's earned income, there's capital gains activity in real estate investing, like flipping. It's pretty much doing something and earning a chunk of money in a very simplistic way. Passive income is more like rental income, right? It's you do one thing and you keep working it. It doesn't mean it's passive. You don't actually have to manage it. That's a whole other misnomer. A lot of people like to myth, if you will, but it's passive in the sense of buying the asset and it's yielding residuals. On the left-hand side, I just want to speak to your strengths, your interests. I'm going to speak to that a little more, but most people, when they get involved in investing or any venture, they don't think about all the great things they bring to the table already. All of you watching this, all of you part of this tribe have so many strengths. I don't know what they are, but there's a ton of them, I'm sure. And you have interests. So if you said, I want to do short-term rentals, vacation rentals, very hot right now, right? Everyone and their mother is trying to buy a vacation rental. It feels like, at least what I can see in my own community, because I'm in the business. But my question would be, and people are like, oh, well, I really, it doesn't align with so just because it's a very hot thing right now doesn't necessarily it's going to meet your money goals and your interests. Last thing I'll just say too, just globally, is that there's a whole economic and market landscape happening. There's up markets, there's down markets, there's the crashes, there's the, what's happening right now. And we're in a very interesting time, right? You're in a market that, the pandemic created even more of a need and want for certain types of assets. People are moving away from different local, markets. They're moving to other markets, and it's a very interesting time. So you can't discount that. So if you said to me, I want to base my goals and base my strengths and everything I'd love to do I really want to earn some chunks of money. I want to replace that in my income, and then I can retire. That's your goal, right? That's what you say your money goals are. And you say, I want to flip in this particular area, but that area everyone's moving from. Well, then you can't flip there. And again, I don't make it so simplistic, but yet people start investing or start activities in areas that just don't align with what they're trying to achieve. So the market and the economy, the local economy, and even like a national economy have to all kind of like align, if you will. And not to get too complicated, but I just want to make it kind of simple. So hopefully that gives you some food for thought. We'll keep rolling here. As we roll into this first piece, before we get into some like specific strategies, which I am going to go through, I got some great insight from Chelsea of what a lot of you have been asking about. So I had a lot of that incorporated. But before we go there, the idea that you do have a tremendous amount of value. And I just need to remind you of that, because I don't think as women, we hear that enough and we know that enough. So just stop and get that you bring value to the table, even if you don't have 1 year, a day's worth of experience in investing, because it takes a lot of different skill sets and a lot of transferable skill sets that you may have that you now can transfer into this type of business and into this type of investing. So I just don't want to discount that. I need to make sure I speak to that, especially for women. I work with a lot of women too, and I don't know what it is, but we can undersell ourselves and we put ourselves kind of like, oh, well, I don't know that. I have never done that. Meanwhile, it's a woman who's like a rock star and she's just underselling herself. So just want to make sure I reiterate that here. So a couple of things, and I'm a very big fan of taking a personal inventory as you're learning about different strategies in investing, which again, we're going to go through all those specifics. Knowing what you can bring to the table is very helpful, because this business, there's a lot of different skill sets needed. So knowing your value and knowing what you can bring is helpful. So a few things, I'll just, if you don't mind, put those all out, if you don't mind. Thanks, Chelsea. You got credit, what your credit is right now. That's helpful to note, especially if you're borrowing money, right? Especially if you're going to be working with banks, obviously. That's an important piece. So if you may not have the credit you're looking for or need, that could be a place to start, right? Assets can be, a variety of things. Your home, businesses, like what do you bring to the table? Money, those sort of things. Again, doesn't mean if you don't have any of that means you can't invest. There's a lot of creative ways to get involved in this business. I can tell you that. We didn't have a lot of this when we started. But you got to know kind of where you're at. What are the pluses, the minuses, your strengths, opportunities, and kind of have like a little bit of a self-assessment. You don't want to go in blindly. Obviously, the time you have in your experience, not just in this business, obviously, if you're new to it, but really in other parts. So you can go to the next slide. And then skills. What are you great at? And I think that's just, I was talking to a woman the other day and she's like, I don't know what I can add. I really want to get into flipping. And I said, well, what do you do? What's your job day to day? She goes, oh, I'm a project manager. I manage very large projects and get them done on time and under budget. I'm like, bingo. Like that's like literally the most important thing you could possibly do if you're flipping a project. Oh, I didn't realize that. Like how important. So again, I just don't want to beat that into the ground, but that gets missed a lot. And obviously your relationships that you may have with people that can maybe lend to you, people that can do business with you, all those sort of things. And you don't never know. And then obviously your personality. So I'm going to get to that a little later. Actually, I'm going to get to it now. I forgot where this was. All right. So let's go to that for a moment, because we're still in that skill number one. What do you see in the left-hand side? If you can, this is a way to keep you here with me. Make sure you're still with me here. But what do you see in the left-hand side of the slide, if you don't mind? I know it's like late. I'm like putting random pictures up here, but I want to make sure you're still listening. So if you don't mind, put in the chat, what do you see in the left-hand side there? All right, duck and bunny. This is a sharp group. Yes, you see a duck or bunny. Sometimes people see a duck first and then they see the bunny, but regardless, you see both. Okay, very good. So what do you see in the right-hand side, the next picture? What do you see there? What do you see in that picture there? Keep you on your toes here. What do you see in the right-hand side? And there's usually a little delay in Facebook. So I'll just do the mouse. Yep, you see a mouse, and people see often an old man too. Facing a mouse. Yep, and it's like those glasses. So what do you see in the bottom picture here? This is a little more of an interesting one. People who like pictures like this usually have not seen the one on the bottom. So what do you see in the bottom? This will keep you on your toes. You mouse and the men. Yep. So what do you see in this last one? I've heard some very interesting things over the years with this one. A man, yes. What else do you say? What kind of man? Does the man look familiar? Jesus, LOL. Yes. I once was doing a workshop. I used to do trainings, and I always showed this slide because it's just interesting. And the woman in the back goes, "I see Jesus." It's just so cute. We're like, "You're in the wrong workshop." No, we were just joking, but it's just cute. But yes, you see his face, his beard. People see. I've heard people see people on a surfboard. I've heard birds. I've heard a bunch of interesting things. Blobs, that's a good one. I like that one, Kate. Blobs, they are kind of interesting blobs. Bottom line, if you want to go to the next slide, you're like, where are you going here, Liz? The bottom line is that you bring something to the table in the sense of your personality, and getting a sense of that is really critical. And it's not just personality, it's skills. If you could put all three of these out, experience and your personality. My point in sharing this to you, why I'm sharing this before we get into some tactical stuff in investing, is that so many times people partner up in this business. They work together. It's a very partnership-oriented business that I've seen over the many years I've been in this business. And people gravitate to each other. Oh, we can both flip together, or he's got the money and she's got this, and do. And you get into partnerships. You start working with people. Oh, let's go buy a rental property, you and your aunt. You hear that all of the time. People kind of doing this together, if you will. And that's great. And I don't mean to dismiss that. But what often happens is that people get too fixated on the skills and experience, and they completely miss the personality part. And that's what I was basically showing you with those pictures, is that what I see of the world is different than what you see of the world. And my corporate training for a decade was basically helping teams across the country and globally help them build teams, basis personality, and how important that is and how it gets missed. So I don't want to get into too much technical part about that, but that's really important. Okay, so after you've gotten your why, after you've gotten a sense of your strengths, what you bring to the table, your like superpower, as people are calling it these days, your core genius, and your why, like why invest, and also doing an inventory, your assets, your credit, just kind of look at yourself a little bit. Second part is getting your finances in order. So what do I mean by that? You know, obviously looking at, you could put all these on here, but your income, your expenses, your debt, your spending habits, your money habits. I'm sure you go through this in this amazing tribe as well. Your relationship to money, obviously your credit score. I spoke to that in your relationship with banks. Why is this so important? Because, you know, I don't care what project you're getting involved in with investing, whether it's your own money or it's someone else's money, it takes money to invest, right? In real estate. And you know, you have to be the most effective steward of that money. And your money habits and your spending habits and how you feel about money comes up in this business or investing, certainly. How cautious someone is, how much of a risk taker they are. I've learned so much about myself through this business. We had money, not going to go into a long story, but we had, forget what episode it was in our podcast, I shared with it and ended up crying, but we had about $750,000 stolen from us. It was a 1031 exchange, which is basically money that was sold from one property and we were going to redeploy it in a new property. But anyway, I mean, talk about knowing what your relationship to money is when that kind of money, right? And it's not just our own money. It was a lot of investors' money. It was mostly investors' money, which was even harder. It has a good ending to the story. But my point in sharing that is, and that probably never happened to you. Hopefully anything like that will never happen. But whatever does happen in this business, you know, you're investing, right? So the loss of money or redeploying money happens in this business, whether it's on a small scale or on a large scale. So the point being is knowing your relationship to money is so important. And I think the work you're doing in this community, in this tribe, is probably really, really powerful because it's going to get you kind of clear on all that before we get into investing. So just getting your finances in order wherever you are in the continuum is so critical. It doesn't matter. It doesn't mean you have to have $500,000 ready to invest. It does not mean that at all. Again, I started with zero, but you need to know where you are in these things. It's really important. So how you'll treat your own money is how you're going to treat money in a project or money in a flip or a rental. It's the same. You're treating it the same way. So You can go to the next step. Thank you. So step 3, determining your risk tolerance and your partner's risk tolerance. So I'm going to give you like a little slide. Again, I'm a big fan of obviously, learning about your personality and learning about like where you are in the continuum. But this is also very important because as you're maybe partnering with someone or partnering with a friend, what have you, you really need to know where you are on like a risk tolerance. A lot of this business comes down to this, right? How cautious someone is or how much of a risk taker they are. There's no right and wrong, but you kind of need to know where you are. If you're someone who's very much a conservative person, you could be studying about short-term rentals for 5 years, right? You could be that person where you literally go to all of our meetups or you're going to all these different things, you're going to these conferences, but you need to make sure you that doesn't stop you. Use that conservative cautiousness for good, if you will, but also to make sure it doesn't stop you where you're over analyzing. You'll have people, and I've worked with women, and because that's mostly who I work with too, that they're risk takers. Oh, we'll just figure it out. We'll just figure it out. And then sometimes that gets you in trouble, right? So there's no right and wrong, but it's really, really helpful to wherever you are on this continuum, whether super cautious or more of a risk taker, it's really good to have accountability partners, friends, people in your close-knit circle that is different than you, because they'll either push you or they'll slow you down. And that could be really, really helpful to keep you kind of mitigate your risk, if you will, because wherever you are, you could be, you want to make sure you're kind of staying on the path of where you should be. So just want to speak to that. So this is probably going to be the most in-depth kind of step, because now I'm going to get into some nitty-gritty stuff, which many of you want and need and ask questions around. But I wanted to give you some context before, because it's really, really important. Okay, so this is all about how active or passive you want to be. So I'm going to explain that. And I think I want you to really think about yourself. I want you to think about yourself, where you are in your life. I want you to think about where what's important to you right now. I want you to think about your life in 5 years. And I know these are, important questions you can't, maybe not going to answer right now, but this is really one, if you take nothing from tonight, which I hope you get some good nuggets, you really want to get a sense of how active or how passive do I want to be in investing? Because you can be 100% active, you can be 100% passive. And those two things mean different things. And you may be able to get to your money goals by a combination or by going down different paths. It also depends on your interests, your time, and your life. You might have multiple businesses going on or multiple interests right now. And you're like, I just want to put my money somewhere, get returns and move on. Or other people are like, I want to run a project. I want to get into the throes of it and really, get active. So I'm going to go through these a little more in depth, but again, conceptually, once you give that concept. So a couple of things with active investing. And again, when I say active investing, in a lot of ways, this is like literally you are running the project, right? You're at the helm of actively running something. Even though if it's a rental property, you're still, in a sense, you or a partner or someone that you're working with is running that project, right? You're renovating it, you're finding it, you're financing it, you're closing it. It's active in a sense. Now, obviously, it's meant to create passive income. You put processes in place, and there's a lot of ways to kind of systematize that, which is obviously the goal. But when I say active, you're kind of like at the driver's seat of the investments, if that's a good visual for you. So number one, determining your financial goals. What do you need? I said that earlier. I think that's, again, something that most people don't do. They jump into different things because they just think they need to start investing and they want to start investing and they just don't know what their goals are. And they could have achieved their goals maybe in a more passive way with a lower percent, lower return on their investment, but still gotten to where they wanted to go. So again, no right and wrong, but just food for thought. Number two, again, after you've figured out where what those goals are, do I want to make money now? Do I want to kind of, make small amounts of money, like a passive income goal, like a residual, if you will, monthly over time and build like a nest egg? Do I just want to preserve my cash and preserve the money I've made elsewhere? All questions, right? Depending on who you are, where you are. Second one, that is determining a niche based on your financial goals. So again, if you said to me, Liz, I love my job. I love my job. I don't want to leave it. I love it. Is like literally why I'm on the earth. but I have this chunk of money and I want to start, redeploying it so I can build my retirement and pass along wealth to my family. And that's your goal, right? You don't need the money now, you need it later. So you might say, okay, if that's the goal and that's my money goal, I want to start doing something, like in a rental, like a rental type of a situation. Now, there's a lot of different assets, a lot of different ways you can get there: a single family, a multifamily, a short-term rental, right? There's a lot of different types of rentals. But then you determine your niche to kind of serve your goal versus the other way around. Okay, so that's what I really want to make sure I get through tonight. Then you obviously are determining a target market. I'm going to go through some specifics around that. 4 is building your team. This is not a solo sport. Building your team is absolutely critical in this business. My husband and I did so much by ourselves for 12 years. I cleaned the apartments. We literally did everything in our units and our rentals, and we went crazy. And it's probably because we didn't have kids at the time. But you got to do that. You got to build a team. And then obviously lining up financing, right? How are you going to fund these deals? It's a big question. A lot of people need to know and want to know because it's just, it takes someone's money to get involved. So that's just some active pieces where you're looking at different things. If you don't mind going to the next one, awesome. So the next slide is I'm going to give you a couple strategies when it comes to active investing. So we'll go to the next slide. So a lot of people, have coined this term, the BRRRR strategy. So I'm going to go through what that means if folks have never heard of that, and just to give you some kind of idea around what I started doing and what we do on any size project that we're involved in. And typically, many investors do on various niches, whether it's a self-storage unit or they're buying a mobile home park or they're buying a vacation rental. I'm going to give you kind of like the secret sauce that people end up doing because you're able to add value. So the first one is you're buying something that needs some sort of value, right? Meaning it could be dilapidated. It could, it just needs an upgrade of some sort. We worked with projects in Philadelphia that are literally gut renovations, right? So that's like the extreme of value add. Other projects may need a little sprucing up, or the mom and pop landlord has never looked at the rental income, their rents for a long time, and they don't realize that their rent is $200 less than the market. Literally, it could be just that. They've never looked at what other people are charging for rent. And in their area, they're literally $200 less. That has happened with buildings we've bought. So again, when I say value add, it typically means like the interior, the exterior of the building. It also could mean the rent that's being brought in and how the tenants are being treated and all those sort of things. But there's a way to really add more value, which will increase the rent, which will increase your rental income in a very simplistic way. Second thing, the R is renovate. So you're going to renovate, right? You're going to renovate it to bring it, again, all varying levels of renovation, right? From like gut renovation to like, just going to put some paint on here and we're going to refresh it, right? All various levels, but renovate is a strategy. Then obviously you're renting it, right? You're going to rent the revised, refurbished, refreshed, if you will, building to, again, short-term to long-term. I'm more of a long-term rental experience. I don't have any short-term vacation rental experience, really. We've really had mostly multi-family experience, but there's a lot of people doing great in that niche, right? Especially right now with people moving around. Refinance. So this is the most important thing. So the refinance part is that you've added the value, right? You've renovated, and in a sense, you've been able to bring up the rent income, and you have tenants there paying off your mortgage, what have you. In a simplistic way, you're then able to refinance because you've added so much value. The building is worth more, and you're able to refinance it. So you're able to pull out the cash and then do it again. And that's kind of like the ideal with these projects. And you're repeating it. And that is literally how, so many of our projects that went well and that we were able to really kind of build upon. It's exactly the process. A lot of books on this, a lot of things. I'm going to give you a case study, a really simplistic one. So these are 2 single family homes. This is probably, 2010? It's about 11 years ago. These are 2 single family homes. So we got our start in Trenton, New Jersey. And so we purchased these both for about $58,000. I know some of you are in different markets and you're like, $58,000, that's low, but that's what these cost in Trenton. And if you mind just putting those, that's great. We ended up, assessing it, and renovations were going to be between the two, because they're literally right next door to each other, or about 40,000. Okay. So not crazy, but not low either. We found a partner. At the time, we were pretty tapped. We had invested some of our own money in different rentals. We built a team. We knew what we were doing. We just needed the help. We need the help with capital. And that is something that happens a lot, whether you're growing in this business or you're starting out, right? Capital is critical. So we found someone by networking, and friend of mine actually from college, and he, and I were talking, and he was he had a, very busy job. He's a financial planner, and we had coffee. We were talking about other things. It wasn't even the purpose of the conversation. And he said to me, Liz, I've always been interested in investing. I'm really curious what you and your husband are doing. I want to get involved, but I just don't have the time. And so I was like, wow, we have the time. We just don't have the money, because all of our money is deployed and we're tapped. And he's like, I got the money, I don't have the time. So it seemed like a good partnership. So we ended up partnering with him. He had an active role in the company. He had an active role in the project. I don't want to get too complicated, but that is important in this business, how active or passive people are. He was active with us. Weekly, he wasn't at the property, but he had other roles. He was looking at the books and really those sort of things. So if you don't mind, go through the rest of those things. Thank you. We then brought a private lender in, and we ended up, our monthly rental income was about $950 a month. It appraised for $150. So if you do the numbers, right, not to get too crazy, it would appraise for $150. We had about 98 in it. We were able to pull out about 50,000, which was his capital. And then we did it again. So that's and we were still making cash flow, and we were still, paying down the mortgage. So that's kind of like a cool part about, I hate to say cool, so it's so, simplistic, but it's a fascinating process, right? Real estate can be very fascinating. And what's really nice about real estate for folks who have high paid W-2s, right? It pulls down your taxable income, right? There's a lot of different tax strategies of why people want to invest in real estate, which I can go on and on about. But so this is another one. This is a fix and flip. I know that's a very big interest of people. We've done a ton of fix and flips. I always say rentals are more forgiving. And now I'm biased, right? Because I have more experience probably in rentals than I do fix and flips. But, fix and flips could be amazing. If you run the project right, you buy right, you sell it right, and all those good things. We got into a few projects that ended up costing more than we anticipated. Contractors left us, those sort of things happen. But if you set these up right and you have the right team, they could be awesome. They can also kick you in the butt sometimes if you're not set up properly. So this was a pretty good, successful project for us. We purchased, this is a fix and flip in Philadelphia. It's a townhome. We purchased it for $250. This was probably like 4 years ago. We rented it for $150. So think about that, right? It needed $150,000. This was not like a paint and countertop. This is a complete gut, right? And that's what most of these projects are. We put about $25,000 aside for, contingency, which is always very important to do in this business. And obviously you see that we needed about, 425-ish to kind of make this happen and make this work. And our goal was that we wanted to sell it for about, 5.25, which was about how much we ended up selling it for. Why I wanted to share this in particular is that people say, okay, wow, that's a lot of money you need. We actually didn't use any of our own money on this. So we got 3 different private lenders to creatively finance this. This was a very quick project, so we couldn't go to a bank. We needed private money to make this work. We needed something quick. And we had established ourselves too. This wasn't our first project, so I will say that. But anyway, we got 3 lenders. We paid them 9% interest, and we paid them at the end. And so we ended up, they ended up not releasing all the money at the same time. There's a lot of creative ways to do that. And they were set up in different positions. And, you might go into the next one too. And then each one got a mortgage and a note to secure their loan. So they had some sort of security so that if, it hits the fan, they had something to go back on. Why I wanted to just share that example is that also gives you an idea that you can either be the lender. So again, going back to active and passive, you could be the lender or you could be the one needing the money. And that's the beautiful part about real estate investing, especially in a private sense. Yes, we use banks, and I'll tell you a bunch of all those, the conventional way to finance deals. But, this is also the creative side. And if you do it right and you do it well, you can win on both sides of this, whether you're the one lending or you're the one receiving the loan. So just food for thought. In order to be successful, I would say a few things. There's three things. Thank you. There's three things you really need to know, and you really need to kind of own: money, market, and management. And I'm going to go through these quickly. So we talked about money a bit today or tonight, but I'm going to go through the money, market, and management here. We're going to fly through these here. Money is all about types of financing. I know that was some questions that some of you had there. Thank you. You mind, Chelsea, just throwing them all out. So perfect. So obviously cash purchase, we know that. Conventional mortgage and is something that, a lot of people are familiar with, depending on what you do. So if you say want a house hack, meaning you decide to you buy a duplex. You live in one unit and you rent out the other unit. You can get really, really great terms, and that tends to be more conventional mortgage, more residential, and I forget but really low percentages. You can get some really good opportunities to get some loans that are not crazy high. Now, say you go into the place of like a commercial loan, and you say, okay, I'm going to go into a 5-plex or a 10-plex. Now you're moving into a different kind of financing arm. And so many times in this business, I don't know how many times, but people will say, oh, I talked to this bank and they don't finance these projects. You're talking to the wrong people. If you're doing a residential loan, you need to be talking to the residential people. If you're doing a commercial loan, you got to make sure you're talking to the commercial people. So make sure you're talking to the right people. And from a banking perspective, over the years, we've had the most success with community-oriented banks, small banks that have a handful of branches. We've never done business in our, for like Wells Fargo or any of the big banks. They don't do investment properties. It's too hairy. It's too whatever. We've always had much more success. Credit unions, those have been the type of banks that we've worked with. So they tend to be more investor friendly, if you will. So just some food for thought. Then you have hard money. Hard money is, it could be an individual, it could be a company. I can refer you to a few people that do that, but they're basically, charging a percent, and they may not be as may not scrutinize as much as, say, more of a conventional, institutional bank, but they also are going to charge more, right? They're going to charge more interest. But again, if it all works and your numbers work, then it's money and it's going to get you your goal, then it can work. Just got to make sure what money's going to cost you and what you're going to make, and you don't want to be upside down. Then you have a couple other things, the more creative, people say creative financing, right? Owner financing and private money. I don't have a ton of experience from a seller financing perspective. I have much more experience like private money. The examples I've been sharing with you are more private money examples. Owner financing, and if it's something that intrigues you, you can Google it and get some great information. But in a bottom line perspective, is that, say you go to someone who owns a property and you say, instead of selling the property, the owner finances it to you in a sense, like they're holding paper. They become the bank in a sense, and you're not paying a bank your monthly fee, your monthly payment, you're paying them. A lot of reasons they would want to do that. You can do that. Very, very creative way to basically buy the property. So you're still buying the property, but instead of paying at the bank, you're paying them. So again, I'm not going to get into that too specifically, but it's a strategy that people have employed, and they do a great job with doing it, and they can get in with no money of their own. So I'm going to go to, again, the first one's money, market, and then management. Market is really interesting. So, how people often ask me, like, how do you find the right market? Okay, so here's what I'm going to tell you. Don't Google hottest markets, and then those are going to be the most expensive markets. Okay. So Austin, Texas, nothing against Austin, Texas. Okay. I think it's a phenomenal community. I'm not saying there's no deals to be had in Austin, Texas. I can't speak to that. I don't invest there, but I would say me and my team are not the biggest fans of going to markets that are literally like 1 and 2 hottest markets. We like kind of like the markets that are not quite there, but they're the up and coming markets. So here's a tip for you. If you have these really hot markets, right, there's like a draw to it. There's a draw to these markets. Start to look at the 1.5-hour radius from that hot market and say, okay, what's in an 1.5-hour radius to that hot market? Because here's a thing that will never go out of style in an up market or a down market, and it's called affordable housing. People need affordable housing. I don't care what market it is. I don't care where you live. Affordable housing is always needed. And if that is a hot market, it's also expensive usually. And people aren't going to be able to afford that market. So where are they going to afford? Hour and a half-ish to that, so they can still get there for their job, but also live in a nice area. So again, food for thought. It's not the most scientific approach, but it's worked for us over the years, and it's really a good strategy, so you don't have as much competition. These are other things you can certainly look into. Obviously, they're critical. What's happening with population, income, unemployment. During COVID, I cannot stress this enough. People are like, should I invest during COVID? And because they got nervous. And that fourth one down, job diversity, was so important. Why do you think that might be important? Because if one sector, one industry, if you will, goes down, there's other industries happening. So the markets that we invest in, you always want to see different sectors, right? It's not just technology. It's not just this or that. It has diversity. And it's really, really helpful to kind of mitigate your risk. God forbid one of those industries just, closes its doors, if you will. And obviously, doing your own analysis on crime, your education, and the weather risk analysis, you're like, what is that? Never heard that one before. That's important, right? So if you're going to buy in North Carolina or you're going to buy somewhere in the Southeast, you kind of want to know where the hurricanes tend to go. Again, it doesn't mean you can't get insurance, but again, doing your own analysis on what actually the weather impact is. Now, if you owned in Texas, you would have never predicted that they would have, not been able to have heat, and cold front went through and all that craziness that happened. But again, doing some analysis on how weather impacts buildings is important, right? Because you're actually buying a real asset. It's not just, out there. So that's a little bit about market analysis. I'm not going to go through all these, but these are some great resources. Hopefully, Chelsea, you can share these. My favorite is City Data. It's a free site. And you can literally go on there and get some great information. We use that, and we've been in this business a long time. Go to there all the time. It's a great resource around just data about a city and what's happening there and in terms of statistics. So all these are great, but I just want to make mention of that. And these will be here for you and just some neat resources. Okay, third one is management. So management is the key. So people always say, oh, I want to buy this property and I'm so excited about it. And they buy this amazing property, right? They buy this dilapidated property, and it's the ugly property. People always say you always want to buy the ugliest property, right? On this beautiful, street, if you will, or community, right? That's the whatever really real estate investor wants. And you do that. And then, you're excited. You have the money, you have the plan, you have your goals figured out. Everything I've said this whole time we've been together, you got it all figured out. Your strengths, and then you don't manage it well, and you don't manage the time, the budget, the team well, and into literally a timeline, like a project manager, you or someone on your team, and it takes 6 months longer than you anticipated. It costs $30,000 more than you thought. The very asset that you were so excited about that should have yielded a certain return ends up not making the profit you want. And I can tell you this because there have been projects that we have managed amazingly with our team, and bingo, and it's literally yields exactly what we thought or even more. And there have been projects that we've had to go to closing. And this is like the worst, right? You do a flip, you work your butt off, and you have to go to closing because we work with a lot of private money, passive investors, and we go to closing, we have to write the lender a check, meaning we sold it for a good price, but we had more into it. So we owed money, right? That you never want to be in that position where you're owing money. You're owing money at the end of the project. We made that investor whole, and they got all their interest and all that good stuff. But it stings, right? It's not like, it wasn't a fun day, but we learned a lot. And we learned about how important that management piece is. Because I don't care what kind of project you buy, if you don't manage it or have someone managing it really to the T, like literally time, budget, team, you'll take a great project and you'll run it into the ground. And it happens all the time. So that's why I wanted to mention that. So I'm going to go through a few things about passive investing, and then we'll take questions. I'm not going to get into this too deep. I should have probably put this at the beginning of the presentation because this gets a little more specific, but I want to give you some insight. I've been talking mostly about active investing and giving you some steps, but here's another option for you. So say you have some money to deploy and you're just like, Liz, I don't want to learn all this. I just want to make my money work for me. I don't want to be in the day-to-day. I don't want to figure out paint color and what tenant to do. You just want to literally make a return on your money and move on. And there are people that just literally want to be passive investors. So there's two ways you can do that. Okay. And these are two ways you can explore further. If you have questions, I'm happy to help because we've worked with a lot of folks who are in both of these places. Private equity and loans. And very quickly, equity is that you have ownership in something. Loan is that you literally are loaning someone money, getting a return on your money and getting that money back. It's a short-term situation. Equity is a longer-term situation. And it tends to be more ownership. So you can win together, you can lose together. People might say there's more upside with equity. There's also more risk, right? Just like most investments. So, but I just wanted to give those two contexts to you, especially when it comes to investing in real estate. Okay, so this is just one. I'm going to probably have you skip. I'm going to go through this and I'll probably skip some of the more specifics because I don't want to get too technical and I want to make sure we have time for questions. But in a sense, this is a lot of passive investors, especially when it comes to like real estate investing passively. People will invest in syndications, meaning that could be apartment complexes, that could be self-storage. Syndication literally just means the syndicator, the operator, is pooling money together from passive investors, limited partners, if you will, to buy a much bigger asset than they can if they just go out and take their checkbook out and literally go buy a building. So the one on the left is a 49-unit building that we purchased 5 years ago. We had 8 investors in it. So we pulled money together. It has to be filed with the SEC. There's more regulatory kind of things you need to make sure you're adhering to. But in a simple way, folks, it was either $50,000 to like $300,000 that they invested in. So it's another alternative for people, right? And there's people doing this all over that are doing it in this way where you're actually pulling money together from other people. A lot of legal docs involved, right? Attorneys are involved, although all the good things that you should see in these types of projects. So again, just food for thought where you can passively invest. This is a project we did recently. We invest in Lexington, Kentucky. It's one of our markets. But anyway, it was a 222 unit. It was an off-market deal. We didn't have any competition, which is always a good thing in this business. And it's interesting, right? Because I'm from the Northeast. So the per unit was $35,000 per unit, meaning that's what it cost. And average rents were $550, which is completely different than the Northeast, right? In terms of what things cost and what rents you can get as well. But this was a lot more. We saw this as a really up and coming market, and really from the research we did, it really was strong. So and needed a couple million. So I just wanted to go to the next slide, not to get too technical, but just in terms of financing this, right? We did, when you finance these types of deals, just if you're looking to passively invest, people, the general partner, which was us, you get a loan from a bank. I mean, it's just like a single family or a 200 unit, right? You're still getting a loan, but where you're getting pooling money together, right? Getting passive investors are for, if you don't mind going to the next part, you're raising the down money. So just like if you buy a single family home, right? You go buy a home for your family, you have to put a certain amount down. So especially now, right? 2008, it was a little different, right? Or before the crash, it was a little different. People were putting no money down. That's not the case anymore, right? So it's just the same for a 200 unit building or 222 unit building, that you're raising the money that you need to put down on the property and also to potentially do renovations. So we had 43 investors involved in this. These were accredited investors. These are sophisticated investors. I don't want to get too technical, but we fully registered this obviously with the SEC. So my point in sharing all this is that we vetted the deal, we vetted the market, and then we obviously put this out to our investor base. Say, hey, this is what we're doing, and 43 people came along with us. They didn't have to vet the deal. They didn't have to do any of the nitty gritty. And that was appealing to some people, not appealing to other people. So again, this could be an alternative where you're passively investing in people's projects, not doing it all yourself. Like, oh, I don't want to analyze a 222 unit, but you also get returns that you may be looking for, right? Might meet your money goals. This is a private loan example. A lot of people in this business, especially through yourself, if you have a self-directed IRA, or you're looking to put your 401k into a self-directed IRA, you can either put that into like equity, like what I just shared with you, or you can even put that in and put it into lending it out to people. This was a flip we did in Philadelphia. If you want to go to the next slide here real quick. This was a new construction project, and it was 3 new construction projects. And if you don't mind going to the next slide too, we didn't put any money of our own in this, but we found the deal. We found the money, we put it all together. We got a conventional loan. But my point in sharing this was a gentleman we worked with previously. He was our private lender. He had about, I don't know, 300,000 in his self-directed IRA. He then lent that to us, and he made 8% interest, and he got percent of the profit. Now he can't touch that. That's the whole point of a self-directed IRA. It's just like a retirement account. You're not touching the profit from that win, but you keep rolling it in the compound and all the good things that happen for retirement. So that was another kind of like win for him, win for us, because we were able to finance the project. So I know I'm giving you a lot of details, and I hope I didn't give too much detail. But anyway, I want to share this, and I'd love to answer some questions, but and I'll stay on as long as you want me to, Chelsea, in terms of answering questions. So I know I went over a little bit, but I want to share this with all of you, in that one of the biggest reasons people don't get involved, especially when it comes to either actively investing or passively investing, is partnerships. And it can be tricky because it's like a marriage, right? So I want to just mention that we've put together literally a guide. It has like probably 30 questions for you to answer about yourself, your partner, really thought-provoking questions so you can set yourself up for success. And that's just the link to get it. And it's we've put that, me and Andres put that together pretty thoughtfully. So I wanted to share that with all of you, if that can help you as you put partnerships together. So yeah, that's the story. I hope that was not too much detail.
No, that was fantastic, Liz. It's incredible what you and your husband were able to build from that first picture that you showed in the slides, right? Now that you guys have so many units, and a lot of this that you talked about, just for the moms that are listening, this got really advanced and technical, right? When you start talking about private equity, when you start talking about, the lien orders for different lenders, right?
Yeah,
your first, second,
absolutely.
third lien. This is advanced stuff, and that's not where you guys are starting. And so I think don't get scared as we're listening to that, right? My background's in distressed debt and middle market debt lending, and so I understand what you're talking about. But if you guys are a little bit lost, that's okay. And so,
I wasn't trying. Yeah, absolutely.
No. And I think everybody understood. I just want to clarify that we all start at the beginning here, right? Mm-hmm. When you guys were first getting started, you didn't have that knowledge either. But I do want to ask a question. We have questions that were submitted at a time. We have some questions coming in now. But as you get into having to deal with loan docs, having to deal with finding investors, how do you make sure the finance is tight and the contracts are tight so everything is clear and you're not getting yourself into trouble?
Yeah, I think you have to use attorneys. I know a lot of us are cheap, and I know when we started, one of our partners we started working with, he was doing all the construction and we were doing all the finding the deals. Mm-hmm. So he would manage the construction and we would be like, okay, we'll do the other parts. And what ended up happening was it didn't work out. I'll say that. That partnership agreement, we Googled it and just found some random template. And I got to tell you, that was really rough because it didn't protect us. It wasn't clear. We showed it to our attorney that we were working with at the time because he didn't put it together. And he's like, this is horrible. Where did you get this? Like, oh, we Googled a partnership agreement. He's like, don't do that again, and I mean, I hate to say that, but that's what we did. And so I just say, people are like, I was talking to a woman that she's buying $1 million property. She's like, oh, I'm just going to do it on my own. I'll figure it out. I'm like, you have to kind of, scale a little bit. If you're going to be kind of playing in that field, you should hire an attorney to help you with an agreement. So I think, having the right team members, there's a lot of attorneys. Make sure you have a real estate attorney who specializes in what you're trying to do. They'll be like, oh, I know how to do all that. Well, have you ever done these types of projects, or do you have experience in short-term rentals, or do you have experience working with 2 different partners? We've hired people that aren't the right fit for what we're actually doing. That has happened too. So I think that would be my biggest, point. And you obviously want to minimize our time because it's going to cost, but you really, most importantly, those partnership questions that I'm giving, as a freebie, they help you think through the questions they're going to probably ask, especially if it's a partnership agreement. But yeah, you just want other people looking at it, making sure you're not, and that's where community helps, right? Am I being taken? Are they charging to me points? And it's a lot of funniness that if you don't know what you're doing, you want to make sure you run it by people who are a little more experienced.
Yeah, real estate meetups and networking are so important in this role. Absolutely. And guys, make sure you go join the InvestHer community, follow that podcast as well as sign up for the download. But so, okay, so we have a bunch of questions here. So first from Busola says, my financial goal is to replace my current income and leave my job and do real estate investing full time. What are some types of real estate structures I should look into? Multifamily rentals, flipping in an up and coming market? What makes the most sense if that's your goal?
Right. So if you have someone who, yeah, and I appreciate that because people want to replace their income. And you can't do that over like night, right? Obviously, that would be a big deal to take down. And quite honestly, it's too risky to do that. That wouldn't even be a suggestion or a strategy. Then you want to say, okay, what activities can I do to start? Because the long game is rentals, right?
Mhm.
Can rentals get you there? Well, if you said, okay, I'm going to go bat to bat with a long-term rental, fourplex versus a short-term. I know people who have a pretty small amount of short-term rentals who are like knocking out of the park right now, that they've been
Mhm.
able to do that, their monthly kind of income, if you will. I don't have a ton of experience with that. That's also a little more of a, you have to kind of work that system, right? There's a whole process to that
Mhm.
I'm more of like the long-term is simpler to us. And that's what we've done. So when we started, my husband quit his job. So we said, okay, we're going to flip a few properties a year to replace his income and then take whatever we make and put it into rentals. Well, that plan didn't exactly work that exact way because we weren't set up with the right people and the right contractors. And that's, part of the business. But I would say, what can you do to start making that like active money right now and start getting involved in the business? So you want to replace your income. Could you work as, people get in being a real estate agent, right? So it's like that active income coming in. Can you wholesale, right? It's like, how do you mitigate your risk? You can flip. Can you help somebody who's already flipping and
Mhm.
maybe like, hey, can I help you or work with you? And I can add value here and there. Like, what do you bring to the table? What skills do you have? But yeah, that's that kind of like do it once and make a chunk of money. Or like I said, there are some very lucrative opportunities in terms of like, I know people have a handful of short-term rentals and they're they replace their income. Again, I can't speak to that because we've been more in the scaling larger multi
Mhm.
space. But it's not the same in terms of like that from that short-term perspective, right? Because you have more investors, you're paying them, like it's a whole business in and of itself. But I would say start working or getting involved in something that is connected to this business. Is property management. Could you work in a property management company that's managing the kind of assets that you're interested in? Again, all to be around the business, to be making money, to do something that you're moving towards your goals, and add value to other people who are doing those niches that you want to be doing. And maybe you'll shadow someone or help flipping, and you're like, I don't want to do that. I have no interest. And now you've just learned that and not had to spend any of your own money or heartache getting involved in a project to be taken by a contractor.
Mhm.
I'm a big fan of like trying to mitigate your risk while taking chances. So those are just some thoughts. But yeah, if you want to replace your income and you want to do it in a like specific amount of time, the active kind of chunks of money. It's not it's not a technical term, but really you're trading your time for something will help you get there. If you don't, keep working and you have to build your passive income and your rental income in like short snippets. But again, depending on what you focus on, you can maybe do that faster. I know, like I said, a lot of people have been doing that more on like the short-term rental side.
Okay, so our next question is from Rochelle. She said, what factors do you consider in knowing if a property is going to be profitable? Are there hard rules for finding a good deal?
Mm. Well, the most important thing is, can you add value to this property, right? So meaning like, are you going to be able to add value to that project to force a higher price, if you will? So take a
Mhm.
rental property. I've never bought a property that never needed anything, right? Because it's almost like, think of it like retail. Would you rather go to like BJ's and get some wholesale deal on your toilet paper, or are you gonna like go and get the like most expensive toilet paper? I don't know about you, but I'd rather go get a ton more toilet paper, spend less money on the toilet, but I have a lot of it, right? So it's like
Mhm.
a whole like thinking like wholesale versus retail. So in real estate, it's the same way, right? So people like they go buy a home for their family. it's probably a little more retail, and that's okay. It's your family home. That's awesome. That makes sense, right? But if you're buying an investment property, you have to think like, am I getting a deal on this? Am I buying it under value for some reason? Is it motivated? Is the person motivated? Is it a bank foreclosure? Is there something funky going on here that no one else can figure out, but I can figure out because I have experience there? So you have to you have to look at things in like a value opportunity, in my opinion. Now, you could go down the path of like a turnkey. A lot of people invest in turnkeys, meaning they literally don't do anything. They don't want to deal with anything. But you're going to pay retail. You're going to pay a more expensive price for that. It's just all about what your money goals are. And there's people who do that very well, and they want a lower percent, but that gets them to where they need to go. It's not like they need to get 20% or crazy. So it really, but I would say, how do you know if a deal is a good deal? I think number one, can you add value? Number two, is it in a market, regardless of you're doing flips or whatever it is, but isn't it a growing market? Is it in a market that people are going to, or are they leaving? And there are some, if you literally Google like California, New Jersey, I know because I'm in New Jersey, I'm very close to New Jersey. There's never been a time in the years we've been investing that there's such a stark reality of what's going on in our country, or where people are going and where people are leaving. It's not like this mildness. It's like very strong, especially with COVID. So look at that and then look at, okay, that's interesting. Everyone wants to come here, but the affordability is down. How can I create, how can I be part of the affordable housing situation? Because there is a shortage of affordable housing. And I think that is an opportunity to serve. And it's also what people need. So I don't know if that makes sense, but I think that really, and I also would say, people get so in love with an actual property. They'll say, oh, this is a great property. If I get this rental income, I'll be it. But then I say, oh, how's that market? Oh, I don't really know. Who's going to rent from you? I'm not really sure. These are really important things. So people get so interested in the project and the property, and they know so little about the market. And I'm much more like, if you're going to know more about one or the other, know more about the market, because the property you can figure out. It's an asset. You can only participate in a market. You can't create it. You're going to participate in something or be in a market that you're like, why did I come here? So that would be my 2 cents. Know your tenant, know where you're going, and then figure out the project from there.
Awesome. Okay, so we have a question from Sarah here who says, I've been a personal assistant to a commercial real estate agent for over 3 years. He recently offered to financially support me in getting my real estate license in order to support my role in growing his business. I'm thankful for this opportunity and have no desire to go out my own as an agent, at least not right now. I'm interested in using my knowledge and network to start investing in real estate and or commercial real estate. I'm curious if and how having a real estate license can have added benefits, or if there are drawbacks from an investor perspective.
Yeah, it's so interesting because there's like, if you Google should people become real estate agent and then an investor, it's like there's probably like there's 2 schools, right? I'm going to give you both perspectives. I've never been an agent, and I've never I never want to become an agent, to be honest, but because it's just not in my realm right now. But my husband did. So one of us did when we started early on. And where it was very helpful is that, I've seen it work really well, is that you have access to the MLS, you have access to the properties quickly. You're also building your relationships, right? You're building relationships with contractors. You're building relationships with the local landscaper. You're building relationships with the title company, the mortgage broker. These are all important people on a team, right? These are all people you're going to build a relationship with, and it's really, really helpful. So that's like the benefits of it. Depending on brokerages, we actually started a InvestHer EXP team, because we see such a connection right between agents and investors, because sometimes they're not always investor related. Why I'm saying that though is, wherever you are, whatever brokerage you're in, you want to make sure that that you have the flexibility, that you don't have to sell X homes to keep your license with them, and then you don't have time to invest. So because it is a business. You're learning a business. Agent business is in itself a business. But I think done right, you can really mix the two. And I know a lot of successful agents who are also investors. And then I've seen a lot of investors become agents because they're like, you know what, I'm asking for the listing. I might as well just go get it myself. I'd rather be on the front lines myself. So, and it's also a nice mix to the woman who asked about the active and passive, or how do I know when that also can mix, right? So you're making money here in commissions, and you're also then putting it into something more long term. Again, the drawbacks is focusing on too much of one, and you really want to be doing the other. I've seen that a lot in our community where women are like, I don't know what I'm doing. I'm spending all this time with these homeowners. Meanwhile, I'm like, I don't care about what home you buy. I just want to go buy my own rental unit. So, depending on your long-term goals and your financial situation, I think you could probably argue both sides, but it has to kind of meet your needs if done right. But yeah, you want to be mindful of the time you're putting into both. You also want to be part of a team or a brokerage or what have you, that there are people investing on that team. Really, really important. If that's a goal of yours, that also could be a benefit where you're like, wow, that team member is investing and they have just as many investments as they're selling homes. I want to join that team. I'll learn about how to be a good agent, and I'll also learn how they invest.
That makes sense. All right, we can't skip a question about the current market because we know that you got to get asked about that all the time. So Marin wants to know, I'm wondering if real estate rentals are a good investment right now, given there's a moratorium on evictions if renters don't pay. How is that, all these protections currently playing into the market?
Yeah, I can speak to that. So we have rentals in New Jersey, Pennsylvania, Kentucky, and North Carolina. And so I can just speak to what we're experiencing with our own kind of, units. I will say, regardless of where you are politically, it's not a political statement by any means, but it has been easier with the states that have been more business friendly overall, because they're, the restrictions have lifted in North Carolina and Kentucky. They haven't in New Jersey. It's through the end of the year. And you can argue, is New Jersey a business-friendly state? I'd probably say no, just basis I've been there for 15 years. It's just, they make it so hard to do business there. Pennsylvania, I'd say, is probably a mix in a lot of ways, but they've also lifted the restrictions from that perspective. So I think, again, regardless of where you are on the continuum, this is about like where you want to buy property. You do want to buy property. It is helpful when it's a little more business friendly and there's incentives, and they're making it easier for you to own property, if you will, than the latter. I will say though, even during COVID, I mean, we were nervous because we had buildings in different parts. We didn't know who was going to pay rent, who wasn't going to pay rent. I mean, we had commercial tenants, we had residential tenants. Knock on wood, a few of our buildings actually did better during COVID. They thrived during it, and have continued. And the buildings that were a little having some problems, some challenges before COVID, were kind of limping through, and we did just fine, and we made it work. So I will say that at the end of the day, people are going to need to pay their rent. Someone's going to need to pay, and it's like, you want to really give people the support. We gave resources. I mean, we were like, how can we help? Right. Obviously. But so many people look at landlords as like they're millionaires and they just have all this money in the bank. And it's just, a lot of landlords, majority of landlords are not that way. They're literally paying their mortgages, they're getting paid. So I don't know, I'm not philosophically going to tell you all that, but my point in saying that is, be mindful of the communities and markets you're buying in. How supportive are they, or how are they, are they making it easier or harder for you to buy a property and to do business there? I mean, that is important and something we consider.
And speaking of markets, we have a question from Kristen who says, our local market has extremely high property taxes, I think second highest in the country. If we're just starting out in real estate, is it better to be local landlords if we're doing long-term rentals, or to go to a market that doesn't have such high costs? That's
a really good question. So for 12 years, we were landlords that literally did not buy a property 30 minutes outside of our home. So we were like, we will not, even if it was like 32 minutes, we're like, it's outside 30 minutes. We don't buy outside 30 minutes. And that was for a long time. And we were in New Jersey. So you want to talk about high taxes, right? I think New Jersey is probably one of the highest taxed states in the country. And then we got an opportunity to buy in Philadelphia. And we were like, all right, this is a little further. And we considered it. So my point in sharing that is, sometimes it does make sense to invest out of state, especially now. So many people are considering that. You obviously want to mitigate your risk. So what are your risks? You're not there all the time. So can you build a local team that has experience that you can trust? Property managers tend to be critical team members. So, we have properties in Kentucky. I live in Pennsylvania. We're not there all the time, but we have people that go to the property all the time, take pictures, make sure what they say they're doing is what's happening. So my point in saying that is, depending on the relationships you have, sometimes you even look in your own network and you go, I got family in Kentucky, or I got family in, I don't know, wherever, that is an interesting market that you want to start to look into. Or I have a friend, or I'm already going there because I have a business relationship there. It sometimes can all fit nicely into saying, and if you don't, who can I? Local realtors tend to be great resources. They know property management companies, they know contractors, especially if it's a good one and they want to be of service. They're not all created equal, but if you can find a good one, and so I would say that that's an important part. But don't be tied to your area. If the numbers don't work, which I know from a high taxed state perspective, they don't. Start to explore, and maybe it's not across the country. Maybe it's like an hour and a half. Maybe it's 2 hours. Can you get somewhere in 2 hours? I know for us, our first larger distance wasn't Kentucky or North Carolina. That would have totally overwhelmed us. We went from Philadelphia, which was like 40 minutes, and then we went to like an hour and a half, and that was really comfortable for us. Then the next move was to go a little further, and we started to build a team. But don't be scared of that. Just make sure you have local feet on the street, not just property managers, but people that represent you, where you can say, let's pay a monthly fee to, very reasonable, to just, on a weekly basis, go take pictures, see what the trash is going on, what tenants are doing, that kind of stuff. That's important that, buildings need. So that's my 2 cents. But don't be tied to an area just because it's what you know, but, make sure you build that local team.
So speaking of property managers, Rochelle wanted to know, do you use property management companies, which you said you do have property managers, and what's a fair fee per property?
Usually so for many years we self-managed. Like I said, before we went to that hour and a half property, we self-managed everything. And we built a team at that point where we weren't doing everything, but we actually paid ourselves, our team, I think it was 10%. So, the management company, if you will, was paid 10% from the rental income. Mm-hmm. Now that's high, that's higher, if you will. But in a sense, it was also very, it was in Trenton, New Jersey. So we had to chase money a little more, collections, right? So you're dealing with a market that needed more handholding. We had to go to tenants' houses, knock on doors to collect rent sometimes. This wasn't just, our tenant base wasn't just, PayPaling us the money and we were good to go all the time, right? So it took a little more time. So I think depending on the area and depending on the asset class, your and the size of the property, the percent can shift. What's interesting is the larger you go, the percent goes down, right? Mm-hmm. So, I think we're paying somewhere between 6 and 8% for our larger buildings and our larger assets. We had a smaller, a 10 unit. I want to say we were paying 10%. So again, it varies. What's really helpful though, as you research and talk to property management companies, research, get 3 of them that really specialize in that market, that know that market. They don't have any assets in that market. I wouldn't hire that property management because they may, we're expanding there. Oh, we're all in the Southeast. It's all the same. No, it's not. It really is not. So people say that all the time. It's not. That makes a difference. If they're in one part of North Carolina and you're looking in another part of North Carolina, it really does. They don't have any assets. They have no one to even go there, especially if it's like a duplex and you're in New York and now they're going to travel to just help you with your duplex. I would want to make sure this is the right team because they're going to be answering the calls of the 200 units and then they forget about their smaller unit property managers, and that's not right. So I think that I would definitely research at least 3 in that local market and research it, have some realtors give you some recommendations, and make sure they have experience in what you're looking to do. If they're like, oh, I have long-term assets, you're like, oh, great, I have a vacation rental. I want you to manage for me. Oh, I don't have any of those yet. I'll be like, no, they're not the right people. Yeah. 2 different asset classes, 2 different businesses, in my opinion.
Absolutely.
So that's just my 2 cents there, if that helps.
Absolutely. Rochelle has a follow-up question. Do you have any good books that you would recommend for beginners in single family or small multi-unit properties?
Oh, there's a few good ones. So, Bigger Pockets has a wealth of great books that are just like high content books that are not fluff and just give so much good stuff. So, a couple ones I'd say that are like there's a great book on the Burr strategy that I was sharing. David Green, I think David Green wrote that. He's a co-host of the podcast, the real estate podcast. Then there's a couple books on even just like tax strategies for in simplistic way that, one of the authors wrote. I want to say there's a beginner, like literally getting started in real estate book that they offer as well. I would go to their bookstore. I would trust any of their books. I read most of them. They're from like literally people. My husband wrote a book for them too, Raising Private Capital. So if that's of interest, I'll give a shameless plug for his book. But my point in sharing that is, sometimes you read books and it's like the whole book is just like a commercial for something else they're trying to enroll you in. Listen, everyone's selling something. I don't mean to say that, but these books in particular are high content and from people who are active investors. So I would say the Burr strategy, and also How to Get Started with No or Little Money Down by Brandon Turner is also a really good one.
Yeah, they have a beginner's guide to real estate that my husband really enjoyed as well. Their stuff is great. Bigger Pockets. Yeah. Mindy has spoken at our events before, and we love Bigger Pockets. So
yeah,
great resource. All right, we got 2 more questions for you, and we'll let you go. I know it's getting so late here, guys, but Liz has had so much great information for us. So we have another question on taxes, which is from Tawny. She says, with home values rising, what should you know about property taxes being reassessed the following year? I know that while you own a property, there are limits to how much an assessed value can be raised yearly, but does the value 100% reset when a home is sold? Is that true for refinancing? She's asking because she's looking at properties in her area where the tax assessment is a quarter of the selling price, and she doesn't know if she should assume that the taxes are going to go up 4x going forward.
That's a really good question. I would say I'm probably not the most experienced in that piece of it. I would say from my experience, though, is that like the tax assessment is not always accurate either, right? So, so that's number one, right? So what they say that the property's worth or what have you is just like kind of like I don't want to say a made up term, but it's usually a lot less than really what it is. What's really helpful, I would say, and it's something that you want to go to is I often will go to the local municipalities and, set up a meeting with them. Obviously, as we're moving out of like, quarantine and everything, that was harder, but these are people who are a wealth of information. They know on another level, they know what new construction's happening. They'll tell you what parts of the community are developing. They'll tell you stuff that's like gold. And you're like, how have I never called this person before? No one visits these people. So the local economic development or the local tax assessor in your particular question are just great resources to say, hey, this is what I'm seeing. What are your thoughts? Like, get it from them. No one even meets these people often, and they're always there and they're always helpful, most of them. So I would start there as a resource. I'd also talk to a local realtor that knows that market really well and get their sense, because they've sold a lot of houses. They've seen a lot of that on their end of it being in the throes of, but yeah, I can't answer that further in terms of my own experiences. I hope that helps.
Awesome. And so the last question we'll cover tonight is from Ruby. She says she's purchasing her first real estate property next month. She's looking
Congrats.
It's so exciting. She's looking for any insight that can help smooth the bumps on her new adventure.
Oh, well, I got to know what kind of property it is. Is it a rental? Is it a flip? What do you, I got to know what you're doing.
She submitted this ahead of time. I think it's a rental property.
Okay. So you're getting your first rental. Okay. So, a couple of things. If you're buying your first rental, the chances of you underestimating what it's going to cost you are very high. So the chances of you not putting something in your line item that's going to cost you some amount of money for some reason is high. And I know that personally because I know one of our first rentals, I was like, this is great. It's like a 1960s building. And the amount of like money we had to put into that property was unforeseen. We didn't realize how much work. So knowing the age of the property and knowing what condition the property is in, you got a lot of tired landlords right now that are selling because it's a great time to sell. So remember, there's a lot of deferred maintenance. There's a lot of things that you may not see with the eye and you get into. So you want to make sure you put enough money aside, enough of those like contingencies. Depends on how big the building is, how old the building is. It's hard to say like put 10,000 aside or 20,000, but you want to be conservative. And that's the worst thing to do is to start like having to find the money to renovate your house or to fix the problem that you didn't even know was going to happen. So make sure you don't underestimate money. Number two, I would say, find a good contractor, find a good handyman, find a good plumber, a specialist. You want to avoid the people that are like, I can do all this stuff. Like, no, if you're a plumber, usually you're a plumber, a really good plumber, right? You're not someone who just kind of dabbles. Electrician, they're usually just an electrician. They're not like someone who,
don't dabble with electrician.
Yeah, but people do it all the time. Oh, this handyman knows a little bit. No, that's a bad idea. We've had people do the wrong thing in our buildings, and it costs more to fix those things. So specialists are important. So find that, like, literally a plumber, electrician, and a handyman. So you've had those simple things, cost you less money. That's like your core team as you get going. Those kinds of folks that can really help you. I'd also say too, is just that you really want to professionalize dealing with tenants, right? You really want to make sure you set up the systems. There's a lot of great portals that were never even around when we started that helps you collect the rent, helps you remind the tenant of X, Y, and Z. The lease is all kind of like clean. It's not so wonky if you don't have those technical support. So there's so many good little systems and stuff that you can employ, but I would get that going now. So you're ready to go with your lease, you're ready to go with your vacancies, and make sure you're kind of like treating this as a business. Even if it's a single family home, you really want to make sure you treat it as a business. So those are a few of my thoughts that popped in my head.
Awesome. Liz, this has been fantastic. You've shared so much great information. Can you remind everybody where to grab the freebie and where to follow you and Real Estate InvestHer?
Sure. So I want to make sure I give you the right link.
Let me put it back on the screen here.
Okay, cool. Totally forgot what it was. So that's just a freebie in terms of that. And our podcast, about 2 weeks ago, we announced we actually are, we're being published now by the Bigger Pockets platform. So we're published under their it's exciting. They're under their family of podcasts. So yeah, you can check us out. We do 2 shows a week. We do a mini-sode Tuesdays, and we do a long interview, all women. Chelsea's going to be on our podcast. So we interview women who are supporting women in investing and business and self-care, which, I know pumped about having you on. And we have meetups across the country. We have 47 meetups that are literally local. Most of them are free, or all of them are free, where women could just come together and help each other, support each other. And we have other things that we're doing around our membership. We have a paid membership, free membership, but our community, our investor community, is free as well on Facebook. And it's literally like women who don't have to work another day, or literally just thought about investing in real estate, all jumping in. I mean, I know these women, a lot of the women's names, and it's just cool to see. Very supportive community. It's not like, oh, that's a dumb question. Like, that stuff, that we don't stand for that. It's a very kind of like inclusive and helpful community of women. So, but yeah, that's where you can check it out. I'm happy to be a help. If you join our community and you seriously have like follow-up questions, I would love to help. I love what Chelsea's doing with your tribe here, and any way that we can help and support you guys, I'm happy to do it. So.
Awesome. Well, thank you so much, Liz. Mamas, I hope you enjoyed this. We'll have the replay up in the portal. And Liz, thank you again. Have a great night.
Thank you so much. Thank you so much, everyone.